Volatility, at least short term, has a dampening effect. Everybody looks over their shoulder at what the price used to be and says, I'm worth more than this. So it's a premium to what in their minds is an artificial value. On the other hand, when there's huge breaks in the market, it's very stimulative typically. Go back to 87. There was a lot of activity. Now, I'm not by any means saying this is the same, but to some degree, the Gannett things felt a little bit like that, to me at least. You know, it's private money and coming after a company that's obviously been struggling a little bit, but from an M&A point of view, is in a very hot sector. If you own content, you have value, even if it's hard to, make money on distributing paper newspapers.
Is there liquidity or the kind of financing available to spur M&A activity as we go into 2019 to take us perhaps to the kind of levels we've seen in strong years?
Well, of course, the treasuries have gone down, so it's made borrowing costs lower. But frankly, with the volatility in the equity markets, as is usual, there's been choppiness in the high yield market as well. But there are oceans of capital available. When you think, go back to the 87 analogy again, there was child's play compared to the amount of equity capital that is available to people now, searching for application because we live in a very low yield environment. You had somebody on just a minute ago talking about cash, that's pretty low yield, but it's obviously safe in a volatile world. So there's oceans of equity capital. Debt capital, it goes up and down, but it's always available. It's just a question of price.
We've been talking a lot about the shutdown and its various effects. Does that have any kind of tie-in with the M&A activity? One would think that regulatory approval screeches to a halt at a time like this.
Well, all of the guys in my business, we're all trying to figure out what to do with the SEC because it's shut down. And so, as is typical, I think, of our economy, workarounds are starting to develop about, well, how do you get a document effective without SEC review?
So what do you do? Well,
there are plenty of rules that say if you file it and wait a certain time, you can do it. Of course, you can only do that in a merger or something. Underwriter isn't going to go along with that. But workarounds are starting to happen. I think there's a general issue here, which in my view has contributed to the slowdown in the second half of last year. It's just uncertainty. It's just one more uncertainty. Add that to the trade issue. You add that to Russia and all the stuff that we're bombarded with. People saying, is there going to be a recession? All of that impacts things. But M&A is fundamentally driven by technology and globalization. That's not changing.
But we're going to have a guest on later this week who's involved in a proxy fight with a mid-cap size company. You expect that there are going to be more of these proxy battles and that it's designed to break apart companies. Do you think we're going to see a lot of that? Because that would be an opportunity, it would seem, for investors to get in. Yeah,
you're going to see more of that. We're right this moment, we're in sort of a quiet time. There was some news last week about a company called EQK, I think it is, a big fracking gas company that has something going on and an activist investor backed into it. We're in the nomination period right now. Most companies, not all, but a substantial majority, there's a period that running right now that ends usually sometime in February where somebody can nominate somebody to the board. With the drop in equity prices, coupled with a lot of shaking out in a lot of places like the CQK thing, which started beforehand, you're going to see a lot of activism. And activism, the concept of just, leverage up your balance sheet and pay out more money, that's not today's story. It's more about break up or merge or something like that. We're going to have a lot of that.
All right, we'll be on the lookout for more headlines on that front. Bob, thank you so much. Bob Profusek is the Global Chair of M&A at Jones Day. Appreciate it.